What is going on, YouTube Nation? This is Art Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. If I were you, I would subscribe and hit that notification bell because I plan on posting a lot of videos. And really, I had to reevaluate things with my YouTube channel, and I need to post more videos, honestly. So I may try to do 2 a day, or 1 or 3 videos every 2 days. I will be starting to do that. So I would highly encourage you to hit the notification bell and subscribe if you're new to this YouTube channel. I reveal to you my dividend investing strategies. I show you what I'm buying. I provide my rationales. And of course, I'm not giving financial advice. It's for entertainment purposes only. Disclaimer in the description. So I'm kind of reflecting on my dividend stock buys that I made on Monday. And remember, long-term dividend growth wins. You always want to raise. You don't want to be at a like a plateau. I mean, I would hate to just make $400 a month. I want to make $420. I want to make $450. I want to make $470. I want to make $500. I want that to grow over time. And I'm going to reflect the stock market a little bit. There's a lot of recession fears. Honestly, dollar cost average wins and buying dips. That's just what I do. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check my dividend stock buys out right now. So I'm going to reflect on a few dividend stocks that I bought, just 3 of them. I think it's very important. These are some that I'm targeting and some that I really like for a reason. So I threw $500 in. Every Monday I throw $500 or Tuesday, just depending on the holiday. I'm actually throwing in $250 today, and I'm excited for my buys. But these ones, I'm actually very happy that the distribution went here. So the first one, I got Banco ZK. I got almost a full share of them. Fifth Third Bancorp, I got a little, less than 0.2 shares, 0.2 shares. StarBucks, I got less than 0.2 shares. Still, I like this one with the dividend growth. I'm going to reflect these guys. PFC, again, 8 shares. I'm doing very well with them. T-Row, I got almost a full share. Kroger, $28.34. I got more than half a share. Target, $45 the quantity. I got almost half a share. Wendys, I got 1.24 shares. And Medifast, I got almost 1 share. So I want to reflect on StarBucks, and I'm going to have probably a future video just showing to you why dividend growth always wins over TSLY. TSLY is beautiful. I mean, I have TSLY. I'm using TSLY to buy dividend growth stocks like StarBucks. This one I'm really happy on with Kroger, and I'm also happy with Wendys. So I'm going to kind of reflect on StarBucks, Kroger, and Wendys real quick, and then kind of like a speed run on Target. So we're going to go over these 4 ones real quick. So first with StarBucks, this is one thing that's very attractive. If I had a IRA with Starbucks in it, that would be fantastic. I don't have Starbucks. I have United Health as my main stock in there. But Starbucks right now is sitting at 99.15, a dividend yield of 2.14%, a PE ratio of 30.19, average volume 6.11 million. The market cap is 113.57 billion US dollars. Year range is 81.67 to 115.48. Day range was 97.34 to 99.23. Its previous close was 97.04. So I'm going to reflect on a few things that I like about Starbucks. So first, long-term dividend investing always wins. I don't care. With long-term dividend growth investing, let's just say that it always wins. The short-term, like TSLY, again, you're not gonna see an amazing dividend growth and trends if you buy and hold and stay forever. So look at this, 93, 2-for-1 stock split, 95, 2-for-1, 99, 2-for-1, 2001, 2-for-1. People really didn't even talk about Starbucks in 2001. And then look, 2005, popularity went up, 2-for-1, 2015, 2-for-1. So these guys have an extensive stock split history. That really attracts me to these guys. This is why I'm buying more. Now, their revenue trends and dividend history is what really attracts me. So this is what attracts me. One, with Starbucks, their revenue trends have gone up. Two, they're always busy. And three, they produce so many crazy high-calorie coffee drinks or mixes. People just continue to buy it. They know the calories are high. They know that it'll probably increase to weight gain. But they like the taste, and Starbucks does a really good job with that. And check out their revenue trends. 2016, this is annually in millions US dollars, 21,000, 2017, 22,000, 2018, 24,000, 2019, 26,000, 2020 a dip because of the pandemic, 23,000, 2021, 29,000, 2022, 32,250. The revenue has gone up, which is very attractive. There's a few more things I want to go over. And this is what I love about macro trends. They're very straightforward, very basic with revealing information. You need to know a lot of this stuff. So their gross profit, okay, it can be defined as a profit a company makes after deducting the variable costs directly associated with making and selling its products or providing its services. So their annual gross profit, it went down in 2019. The gross profit in 2020 was up 28.43%. 2021, it was up 7.93%. The gross profit for the 12 months ending June 30th, 2023 is $23.829 billion, 8.8% increase year over year. Starbucks gross profit for the quarter ending of June 30th, 2023 was $6.304 billion, a 13.86% increase year over year. Now, the other thing I like is their earnings per share. I'm going to go over that. So their earnings per share have consistently gone up. That's what's very attractive as well. 329 right now. It was 372, went to 354, then it went to 283, 288, 309, 329. So it is trending up. This is in the trailing 12 months earnings per share. Quarterly, it's starting to trend back up, which attracts me. So quarterly, it was 79 cents at one point, 77, 74, 79, and back to 99 cents. So it's slowly trending up, and it's in an upwards trend, which is very attractive. And the data reveals, so the annual earnings per share in 2020 was a decline, 72.95% decline, 2019. Okay, that makes sense because of the pandemic. Starbucks 2021 earnings per share was $3.54, a 348.1 increase from 2020. That's a huge surge since the pandemic. Starbucks 2022 annual earnings per share was $2.83, a 20.6% decline in 2021. Big deal. So this is what attracts me again. The earnings per share of the quarter in June 30th, 2023 was 99 cents, a 25.32% increase year over year. So they're making a comeback. They're doing pretty strong. Now there's a little bit of a data. The earnings per share in the 12 months ending June 30th, 2023 is $3.29, 7.06% decline year over year. I'm really not too concerned because, again, the earnings per share with the trends are slowly going up, and I really like these guys. I mean, the revenue is done fantastic. These guys are expanding. They're getting bigger, and they're getting more powerful. So I'm going to jump to their dividend history. So I'm going to start in 2016. It was 20 cents to 25 cents. 2017, it jumped to 30 cents. 2018, it jumped to 36 cents. 2019, it jumped to 41 cents. This is quarterly distributions. 2020, it jumped to 45 cents. 2021 to 49 cents. 2022, 53 cents. And hopefully they will get a dividend hike at the for the most recent earnings reports, and they're just growing and growing. So their payout ratio is 64%. I am not too concerned. The dividend increases in the last 5 years is 4. Dividend growth in 5 years is 9.68%. If you bought one share, you made $212 with a 2.14% dividend yield. So it's not a high yielder, but look at the dividend growth. So that's one thing you need to realize is dividend yield doesn't mean everything. Now I have a hybrid of high yield dividend stocks and dividend growth stocks, but honestly, dividend growth stocks win in the long term. That's why I'm using TSLY's ETF's dividend income to buy dividend growth stocks, because I'm giving myself a raise. And, I'm loading up on business development companies like CSWC. So hopefully if I ever get to that point where I'm starting to earn $200 quarterly, I can, change a M1 Finance distribution to 2 or 1% so that I can buy these dividend growth stocks. So imagine with CSWC where I'm getting $200 a quarter and some of it's going into Starbucks. So that's the long-term dividend investing strategy that I have. And plus CSWC, an extra $200 a quarter, for the rest of my life isn't too bad either. So this is what I like about Starbucks. And the thing with Starbucks, okay, look at all those dividend hikes they have quarterly. They get these stock splits. So long term, their dividend income will beat TSLY eventually. So this is why I like TSLY to buy these guys, because I love long-term dividend investing. Let's jump to the next dividend stock. And Wendys is another one that I've been really capitalizing on. They've done extremely well. And with my most recent video that I had of them, I covered their expansion plans. These guys are a fast food restaurant. I see them busy all the time. People are always in line at Wendys, which is very good. And they started breakfast. So they're trying to compete with the McDonald's and the Burger Kings out there. The Wendys right now is 2030. Dividend yield of 4.93%, a PE ratio of 22.75, average volume 2.45 million. Market cap is 4.25 billion US dollars. The tier range is 1850 to 2390. Day range is 2007 to 2031. Its previous close is 2030. So I'm not going to go very in depth with these guys, but I just want to show you their revenue trends and their dividend history. So studying the revenue trends of Wendys, I'm not going to, like I said, I'm not going to go in depth. There's things that really, the earnings per share doesn't look like attractive, but long-term wise, these guys are really something that I like. And the reason why is these guys are a little bit smaller, starting to get bigger, and their expansion plans are getting bigger and more powerful. And the revenue trends are starting to back it up. So this is annually in millions US dollars. 1,435, 2017, 1,223, 2018, 1,589, 2019, 1,709, 2020, 1,733, 2021, 1,896, 2022, 2,095. So I'll just go over the earnings per share real quick. I'll show you a few things. So I'm just going to show you their earnings per share in the past 12 months. It slowly is trending up. It's not like something that's too exciting, but it's getting there. The trailing 12 months, at one point it was 56 cents to 58 cents to 50 cents, 44 cents, 52 cents to 64 cents, 82 cents to 89 cents, to 89 cents, to 88 cents, to 81 cents, to 87 cents, to 82 cents, to 84 cents, and 90 cents. So even down here, quarterly, it's starting to make a comeback. So that's one thing that attracts me. I'm going to jump to their dividend history now. So I'm going to start in 2012. They're 4 cents quarterly. 2013, 5 cents. 2014, 6 cents. They were a little stagnant. 2017, 7 cents. 2018, 9 cents. 2019, 10 cents. 2020, 12 cents. Then they did a cut because of the pandemic, 5 cents to 7 cents to 9 cents in 2021. 12 cents, 2022, 13 cents. So they're making a comeback with their dividend. And then in 2023, they announced 25 cents. They have a high payout ratio. This is one thing that I just wanted to emphasize to you guys. It's high right now. Long-term wise, I feel very confident in these guys, and I'm going to continue to buy. I see them busy. I see the revenue trends. This is why I'm buying these guys. Again, I'm not giving financial advice. I'm just providing my rationales. Dividend increases in the last 80 years is 8. Dividend growth in 5 years is 17.85%. If you bought one share, you made $1 at the 4.93% dividend yield. Now, again, it's high, but long-term wise, I see these guys becoming a dividend growth juggernaut, and you're seeing it right now. They made that announcement, and that put them on the map. Now I'm going to jump to Kroger. So Kroger is one of my favorite dividend growth stocks. They're sitting at 46.49. They're in line with the S&P. They were beating them, and they're like neck and neck with the S&P. Their dividend yield is 2.50%, a PE ratio of 13.36, average volume 3.94 million. Market cap is $33.37 billion US dollars. The tier range is 41.82 to 52 dollars. Day range is 46.16 to 46.68. Its previous close is 46.43. I'm going to go over these guys a little bit in depth. In perinvesting.com, they have a pretty good stock split history: 79, 1 for 2, 86, 1 for 2, 1997, 1 for 2, 1999, 1 for 2, and 2015, 1 for 2. They do have a good stock split history. Again, that's not guaranteed, but I like their trends with their stock split history. That's what I like about those guys. And I'm going to jump to their revenue trends and their dividend history. Their annual revenue in 2021 was $132.498 billion, an 8.35% increase from 2020. Annual revenue in 2022 was $137.888 billion, a 4.07% increase in 2021. Annual revenue in 2023 was $148.258 billion, a 7.52% increase in 2022. The revenue in 12 months ending in April 30th, 2023 was $148.823 billion, and a 5.41% increase year over year. The revenue for the quarter ending in April 30th, 2023 was $45.165 billion, a 1.27% increase year over year. So I'm going to go over earnings per share now. The Kroger in 2021, the annual earnings per share was $3.27, a 60.29% increase from 2020. 2022, the annual earnings per share was $2.17, a 33.64% decline in 2021, not concerned. 2023, the annual earnings per share was $3.06, a 41.1% increase in 2022. So for the 12 months ending in April 30th, 2023, it was $3.48, a 20.42% increase year over year. Kroger earnings per share in the quarter ending in April 30th, 2023 is $1.32, a 46.67% increase of year over year. Now, terminology: earnings per share can be defined as a company's net earnings or losses attributable to common shareholders per diluted share base, which includes all convertible securities and debt, options, and warrants. One more thing I want to go over. So this is what I like about macro trends, and a lot of you guys that are new to investing, you need to know these terms, and macro trends provides this. You need to know this type of terms and how it's applied. So net income can be defined as the company's net profit or loss after all revenues, income items, and expenses have been accounted for. Their annual net income in 2021 was $22.585 billion, a 55.82% increase from 2020. Kroger's net income in 2022 was $1.6555 billion, a 35.98% decline from 2021. Okay, so that I would blame the pandemic a little bit and some issues going on, because these companies are trying. It's like trends are like a little bit of a zigzag with pandemic and post-pandemic. Kroger's annual net income in 2023 was $2.244 billion, a 35.59% increase in 2022. Net income for the 12 months ending in April 30th, 2023 is $2.542 billion, a 16.66% increase year over year. Annual net income for the quarter ending in April 30th, 2023 was $0.962 billion, a 44.88% increase year over year. That's very important. I wanted to point that out. Now let's jump to their dividend history. So we're going to start in 2015, 11 cents. This is quarterly distribution. 2016, 12 cents. 2017, 13 cents. 2018, 14 cents. You got a special dividend, 46 cents. And then 2018, 14 cents. 2019, 16 cents. 2020, 18 cents. 2021, 21 cents. 2022, 26 cents. And then 2023, they cracked 29 cents. They have a low payout ratio. It's attractive. It's at 24%. Dividend increases in the last 5 years is 5. Dividend growth in 5 years is 15.79% as I sip my Starbucks coffee, which is free because my apartment complex in the lobby now offers Starbucks coffee. Hold on. Free coffee and receiving dividend income this week from Starbucks. Beautiful. Dividend yield is 2.50. So if you bought one share, you made $1.16. So that's very attractive. Again, don't chase yield, but the dividend growth, long-term wise, you got Starbucks, hopefully Wendys, they're starting to make a comeback. And then you got Kroger, that's very attractive. And I'm going to jump to Target. The problem with Target is they open their mouth with this woke stuff. And my honest opinion, politics and work, never good, because this is what's going on. Sitting at 126.16, a dividend yield of 3.49%, a PE ratio of 17.31. The average volume is 5.43 million. Market cap is 58.24 billion US dollars. Its year range is 120.75 to 181.70. Its day range is 123.77 to 127.66. Its previous close is 123.43. So they took a huge dip. I don't like to discuss politics. I'm not a fan of that, but it's just this is what's going on, and it's blowing up in their face. This is what's going on with Anheuser-Busch, with Bud Light. Just keep the politics out, do your job, sell your products, advertise. People are still going in the stores. Don't get me wrong. This is not a beverage. If you're a beverage, you're in trouble with playing the politics game. Target, it's a different scenario because they got a lot of good stuff in their stores. Don't get me, and I shop at Target. I don't care. Now, let's jump to their dividend history. I just want to briefly go over these guys. So I'm going to start in 2017. Quarterly distribution, 62 cents, 2018, 64 cents, 2019, 66 cents, 2020, 68 cents, 2021, 90 cents, 2022, 108, and then 2023, 110. So their payout ratio is 59%. I'm not too worried. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 13.01%. If you bought one share, you made $4.40 with a 3.49% dividend yield. They made some foolish mistakes, and I'm capitalizing on the dip, and I'm buying them. And Target is always busy, and I'm hoping that we get some nice dividend growth with these guys in the future. 13.01% in 5 years is pretty nice. They opened their mouth, and it blew up in their face, just like Anheuser-Busch. And I'm telling you, I don't see Bud Light anywhere in any bars. I have yet to see somebody drink Bud Light. That's not good. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to try to squeeze in one later today. So you hit that notification bell and keep an eye on my channel. Now I'm going to my favorite part, which is the disclaimer. So as a reminder, my YouTube channel is for entertainment purposes only. I am not giving financial advice. I provide my rationales with my dividend stock buys. If something drastically happens, a dividend cut, I may sell these stocks or a certain stock that I'm covering. I went over Starbucks, Wendys, Kroger, and Target. I am long in all four of those. If something happens drastically, I will get rid of them. Investing is a huge risk. You can make money, you can lose a lot of money. So honestly, and this is what you should do, is seek financial advice with a financial advisor, somebody that is certified to give financial advice. I'm doing this for entertainment purposes only. I'm doing this for my to reveal to you my dividend investing strategy, my dividend growth investing strategy. Very transparent with my buys. Make sure you follow me on X, by the way, because I'm getting very active on there, and I would appreciate it if you guys followed me on there. That would be amazing. Because remember, everything's free on this channel. I don't charge you to watch my videos. I don't have a Patreon account. So I just want to be clear. I have a disclaimer in my description of this video. And I'm doing this for entertainment purposes only. Don't look at me as your savior. Don't look at me as somebody that's consumed by the dividend side and that he is the all-knowing, all-powerful savior. I mean, I've made mistakes in investing. Some things have blown up my face. I'm human. Somebody that I ended up blocking said that I can do no wrong. Actually, I have done wrong, so I'm just being clear. and you just don't need to deal with negative toxic energy in the investing community. So that's basically what I'm just going over. Not financial advice, entertainment purposes only, and I'm here for you guys. I provide my rationales, and I reveal to you my dividend income, passive income journey. You guys take care and have a good one.